Of Bloomberg Daybreak Europe, and also a deeper dive into Richemont earnings, a look at the luxury sector, how it's been performing this quarter, plus more progress or perhaps lack of it at COP26. Baringa's political economist Caspian Conran is back with me this morning because they have a real-time analysis of countries' commitments to climate change goals. So he's going to talk us through what has changed during COP26. That's next. This is Bloomberg.
Supply chain performance.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe for this Friday, the 12th of November in London. Coming up this hour, inflation fears strike, Treasury yields pop after the US holiday as Wednesday's shock CPI miss continues to ripple through global markets, but stocks edge into the green. COP26 wraps up today. A deal on carbon trading runs into new obstacles, threatening a key pillar of the conference.
China's president is one step closer to potentially ruling for life, and the US warns Europe of a possible Russian invasion of Ukraine. I'm Leanne Gerrans with World News.
And help wanted. The number of job adverts in the UK is at a record high, but most British businesses say they're being hurt by higher prices.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM Channel 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
A very good morning from London. I'm Caroline Hepker. Warm welcome to Bloomberg Daybreak Europe this morning, where we are going to talk about COP26 and the Climate Change Summit. Is this going to be the last few hours? Will it extend into the weekend in order to try to get a big deal? We'll see. We'll discuss the luxury stocks and Richemont in a moment too, but also what's happening in the markets, which of course, what will force the Fed's hand? Is it these moves in bond markets, the reaction to inflation pressures, US 5-year yields climbing, and this morning up another 2.5 basis points on the US 5-year. As for the 10-year, it trades at 1.565, so also up by a basis point. So yields nudging upwards. The spread between 5 and 30 yields also shrinking. But in terms of stock markets, actually, you've still got stocks doing reasonably well, so not quite so concerned about the inflation angst that we see in bond markets. S&P 500 E-mini futures are actually higher, along with US stocks 50 futures. In China, the equity performance actually a little bit lackluster. CSI 300 is down 0.2%. That is despite Alibaba's Singles Day sales hitting a record high. In terms of the Bloomberg dollar spot index, it's flat at the moment, but the dollar has been rising against all of its group of 10 peers this morning. Also, we're watching the ruble, this US warning around a Russian invasion of Ukraine, that has weakened the ruble. As for WTI crude futures, gold, Bitcoin, they all sink this morning. And we're also watching out for euro area industrial production figures that drop at 10 a.m. That's going to be pretty crucial for the picture in Europe this morning. Right, those are the markets right now. Dropping on the Bloomberg terminal, the results from AstraZeneca. Third quarter core earnings per share come in at $1.08. The estimate, though, was for 1.25 cents. So that from AstraZeneca. So any more headlines from AstraZeneca we can bring you. Yeah, so as for Astra, yes, that does seem to be the big line in terms of core earnings per share. They say that they're vaccine revenue for the fourth quarter 2021 is to grow by mid to high 20s. So the mid to high 20% range. So that from AstraZeneca this morning. Right, those dropping on the Bloomberg terminal. Let's bring in Bloomberg's Noor Al-Ali, our Markets Live editor this morning. Noor, great to have you sitting with me in the London radio studio this morning. Inflation hedges. This is the big story in markets, tips and more. What's the latest?
Good morning, Caroline. Well, I think the question here is, what is the appropriate inflation hedge right now?
Sure.
That's a big question. It doesn't look to be bonds. I think we're all running away from bonds. And I think the reason for that is because of those policy concerns that the markets are having. And the question here, another one, is whether or not the Fed and other policymakers around the world are going to respond to them, or they're going to let them come to them. So I think it's just a matter of a waiting game at this point.
Okay, so is it gold? Is it, Bitcoin even?
That's a really good question. I was going to come to that. I think it's both. I don't think we're fighting between Bitcoin and gold. At the moment, I see a rejection of this paper-based value that's being controlled by central banks. So you look at gold. Gold is, the classic inflation hedge. It's struggled recently, but now with the real yields relationship and that inverse relationship, it's finally taken off. And you've got Bitcoin. We all remember March 2020 when Bitcoin took off while every other asset was falling. And I think we're starting to see that settle in. I just wonder if that's actually going to be the use case in the coming months, or if that's going to be shaken again.
Yeah, that's an interesting proposition, isn't it? Well, gold in terms of the spot price, $1,859 per troy ounce. Actually, it's down 2% though this year. So perhaps, as you say, it's just the start of the gold trade. And just a thought on Chinese stocks, though. I mentioned Alibaba. What else is playing in here to Chinese equities?
Well, you also have the relief that the property market is going through at the moment because of what we think is an easing from the Chinese crackdown and policy side. Again, it's about policy. It's that theme recurring itself, a little bit more idiosyncratic in China. But I think here, we're seeing signs of the Chinese government really easing, at least, maybe perhaps to give that temporary relief that we've spoken about earlier for these equities and these entities before they kick it up a notch again.
Yeah, absolutely. The Chinese Communist Party concluding this 4-day plenum, is she going to be ruling for life or not? But yes, that has been the market interpretation. Perhaps this is the end of that kind of prosperity push and the impact on business, at least for now, or pause anyway. We'll see. All fascinating stuff in terms of what we should be marking in terms of markets this morning. That is Noor Al-Ali, who is our Markets Live editor. And for real-time market commentary and analysis, check out Markets Live. Always well worth a look. MLIV on your Bloomberg terminal. Let's go to our top stories then this morning. And speaking of inflation, there is more evidence of pressure here in the UK. The British Chambers of Commerce says that 80% of UK businesses are feeling the effects of higher prices, as well as shortages of goods and workers. Now, the lobby group surveyed 1,000 companies. Firms cited rising costs for fuel, shipping containers, electricity and natural gas as the biggest burdens on them. But then at the same time, British firms are still struggling to actually recruit staff because the labour market is really not showing any signs of cooling. Bloomberg's Ewan Potts has the story for us.
Driving instructors, prison officers and forklift truck drivers, 3 of the job categories seeing the biggest increase in demand at the start of this month. According to a survey by the Recruitment and Employment Confederation, more than 220,000 job adverts were posted during the first week of November. That's the 4th highest figure since the start of 2020, and that takes the total number of active job postings to a record 2.68 million. In London, I'm Ewan Potts, Bloomberg Daybreak Europe.
And now to Glasgow. Climate talks at COP26 are entering the final stages, but negotiators are still far apart on several key issues. Bloomberg's George Shanker has the details.
Creating a global carbon market is considered a benchmark for the summit's success, but negotiators have tried and failed to nail an agreement on the issue since 2015, and talks on making it happen at this year's summit have run into new obstacles. Sources say countries cannot agree on how to account for emissions credits that get sold in the global market. Discussions continue today, with less than 24 hours to go until the summit is due to wrap up. In Glasgow, George Shanker, Bloomberg Daybreak Europe.
And in post-Brexit news this morning, the Brexit Minister David Frost is meeting the Vice President of the European Commission, Maros Sefcovic, in London today. Now, it'll be the fourth attempt to come to a resolution on the issues around trade for Northern Ireland. There is growing speculation that the government could use a get-out clause from the deal with the EU in the coming weeks. Frost told the House of Lords on Wednesday that triggering Article 16 would be the UK's only option if the dispute was not resolved.
They seem to be claiming that it will be entirely unreasonable for the British government to use these wholly legitimate safeguard provisions within the treaty. I gently suggest that our European friends should stay calm and keep things in proportion.
Well, Frost went on to say that in his view, this talks process has not reached its end. So that on Brexit. Meanwhile, over in the United States, the White House isn't worried about Jerome Powell's trading history. Bloomberg has been told that officials don't believe the Fed's chair's sale of shares in a stock index fund last year disqualifies him from being appointed to a second term. Powell sold a stock index fund worth between $1 and $5 million last October. But our sources say that some within the administration who support Lael Brainerd still have concerns about that Powell trade. And I mentioned Singles Day. Well, sales for Alibaba's Singles Day shopping festival were a record $84.5 billion. We get the latest now from Bloomberg's Rosalind Chin.
Singles Day has come to dwarf US Black Friday and Cyber Monday in both intensity and size. Even so, this year's festivities were more low-key after a year of regulatory scrutiny and a record $2.8 billion antitrust fine. Before this year's event, Beijing called on domestic e-commerce platforms to curb marketing spam via text messages and to refrain from unfair pricing. And Rosalind Chin in Hong Kong, Bloomberg Daybreak Europe.
And finally, AMC Entertainment now accepts Bitcoin, Ethereum, Bitcoin, Cash and Litecoin all as online payment methods. That's according to a tweet from the company's CEO, Adam Aron. The company also accepts Apple Pay, Google Pay, PayPal payments, but he says that cryptos already account for 14% of the cinema chain's total online transactions. Dogecoin next, a fascinating little example there of the spread of cryptocurrencies into kind of everyday life, also for this meme stock, AMC Entertainment. Right, that is a wrap-up of our top stories this morning, but there's lots of global news to get to, including that China plenum I mentioned. Bloomberg's Leanne Gerrans is standing by with all the world news. Hi, Leanne.
Good morning, Caroline, and thank you so much. So you just mentioned that plenum over in China, and it has reached a historical starting point. That is according to senior Communist Party officials. Top leaders have paved the way for President Xi Jinping to rule indefinitely by signing off on the first historical resolution in 40 years. Let's get to our Greater China editor, Jenny Mars, who does join me now. Jenny, good morning, and great to speak to you again. Just firstly, were there any surprises at all?
Hi, Leanne. I think, what we've seen so far of the document, and I should say it hasn't been published, we've just got a communique from the meeting this week. But what that summary has kind of seen is that it's just a celebration of 100 years of successes of the Communist Party, with a special emphasis reserved, of course, for Xi Jinping and the leadership that he's shown over the past 10 years. There were a couple of surprises, I would say. Chiefly, the previous two historical resolutions that we've had from Deng and Mao have both looked back at difficult periods in Chinese history. The summary we've seen so far makes no reference to any of the traumas in the Communist Party's history, such as the Cultural Revolution or the Great Leap Forward. It really is a resoundingly positive document. And one other thing I think that has caught analysts' eye is the fact that there's no mention of the Belt and Road. And when that was launched in 2013, it really was Xi Jinping's signature foreign policy initiative. So for that to have fallen by the wayside is perhaps a signal that they're moving away from that policy.
And Jenny, why was it so important for Xi to clinch this resolution?
This resolution really is the biggest available show of support that Xi Jinping can get at this point ahead of a crucial leadership congress next year. by getting the nearly 400 members of the Central Committee to endorse his vision, he's really sending a strong signal to the rest of the country and indeed the world that the Communist Party backs him in his leadership and wants him to continue leading. A lot of the goals outlined in the summary of documents talk about 2049. They're looking forward, into multiple decades. And the fact that she is cast as the person who should execute many of these goals really heavily suggests that when it comes to the Leadership Congress in 2022, Xi Jinping is not going to be stepping down.
Bloomberg's Jenny Marsh, thank you so much for joining me and bringing me all the latest on China, which has reached a new historical starting point. We do appreciate all of your great work, and we will have more on that story throughout the show today. Jenny Marsh, thank you for joining us. Now, in other news, the US is warning Europe that Russia may be planning to invade Ukraine.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Tensions are flaring between Moscow and the EU over migrants and energy supplies. Sources tell us Washington is monitoring a build-up of Russian forces near the Ukrainian border. Meanwhile, German Chancellor Angela Merkel spoke with Russia's President Vladimir Putin for a second day in a row over the escalating situation on the EU's eastern border. That is after Belarus threatened to shut down a key pipeline carrying Russian gas to the European Union, escalating a migrant dispute. And the Austrian region with the highest coronavirus infection rate is planning a lockdown of the unvaccinated as Central Europe once again struggles with COVID. However, the country's chancellor says he's ruled out a lockdown for those who are vaccinated. In Asia, Beijing is asking for activities to be moved online, with the city facing more infections than at any time in the past 17 months. Meanwhile, parts of the US are starting to see the impact of an autumn COVID wave, with the healthcare system now under serious pressure. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Caroline.
Thank you so much, Leanne Gerrans. Yeah, really fascinating to hear about Xi Jinping and what's happening in China this morning. Let's get the sports news now, though. Here's George Alderman.
Chief Executive Mark Arthur has followed Chairman Roger Hutton by resigning from Yorkshire County Cricket Club. It follows heavy criticism of the team's handling of racism allegations by Azim Rafiq. But Arthur made no mention of the scandal or their former player in his leaving statement. Australia will face New Zealand in Sunday's T20 Cricket World Cup final after winning a thriller with Pakistan. Matthew Wade smashed 3 sixes in a row to seal a 5-wicket victory and inflicts a first defeat of the tournament on their opponents. England's no win against Albania tonight will all but put them straight through to next year's World Cup. They round off their qualifying campaign against Minnows San Marino on Monday. Before the action kicks off at Wembley this evening, Scotland can seal a playoff place with victory away in Moldova. Northern Ireland, who can't qualify, host Lithuania. Wales were guaranteed a spot in the playoffs without even playing last night after Spain beat Greece 1-0. The Republic of Ireland drew 0-0 with Portugal.
So that was George Alderman bringing you the latest in the sports news. Of course, the cricket saga rumbling on. Still ahead on Bloomberg Daybreak Europe, luxury pays off. Richemont sees a first-half operating profit beat as earnings exceed pre-pandemic levels. We'll dive into Richemont and the other luxury names this morning in just a moment. This is Bloomberg.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters here in London, I'm Caroline Hepker with this Bloomberg Radio Business Flash. So the US had a day off for Veterans Day, returned and then reacted to that shock CPI number in the US. So US 5-year yields have climbed. Does the Treasury sell-off force the Fed's hand? That is the key question in bond markets this morning. Also, we've seen the spread between 5 and 30-year yields shrink, and yields continue to nudge higher this morning. In terms of 10-year Treasury yields in the US, we're up a basis point at 1.566, and for the 5-year, we're up by just over 2.5 basis points at 1.246 this morning. Also, there are concerns, of course, around global inflationary pressures, including here in the UK. As for equity markets, though, not as much of a worry really around inflation, it has to be said. MSCI Asia Pacific Index is up 0.7%. You have gains for the Shanghai and Shenzhen comps, and also the Hang Seng up 0.4%. But the CSI 300, the outlier, down 0.2% this morning. Alibaba's Singles Day saw a record $85 billion worth of sales. Incredible number. As for the FX markets, the dollar this morning has been rising against all of its group of 10 peers. We're keeping an eye on the ruble. The US warning of a Russian invasion of Ukraine. That sent the ruble down some 0.5% against the US dollar. Oil, gold, Bitcoin all slumping this morning. Bitcoin actually down 1%, 64,435. Is it the new hedge against inflation? Bloomberg's Noor Al-Ali was pointing to that just earlier this morning. That is a Bloomberg Radio Business Flash. Now here's the Anne Garrett for more what's going on around the world. Good morning.
Caroline, good morning. And let's start in Germany, where the number of new virus cases have surged to a record. The latest data comes as several regions in the country weigh additional measures to curb the fourth wave of the disease. Germany's efforts at controlling the pandemic have been complicated by a lackluster vaccination campaign, with millions of adults not yet inoculated. Now, in the US, a 9th person who was injured at a music festival in Texas has died. Authorities in Houston say the student was critically hurt during rapper Travis Scott's performance at Astroworld last Friday. At least 60 lawsuits have been announced, signaling out Scott and fellow singer Drake, who took to the stage in the final 15 minutes of the concert, while after authorities had declared a state of emergency. And we're being encouraged to think twice before buying gift cards as Christmas presents this year, just in case the retailer collapses, which has found that's happened to around 1 in 10 people since the start of the coronavirus pandemic. The group says while credit card purchases offer some protection, gift cards themselves are now unregulated. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Caroline.
Thank you so much, Leanne Gerrans. Yeah, interesting warning ahead of Christmas. Thank you so much for that. Well, speaking of Christmas, perhaps this will play into the luxury sector, which, of course, has seen a slew of companies reporting results this week. Now, Richemont is just the latest. It announced first half operating profit that beat as earnings exceeded pre-pandemic levels. But there's quite a lot going on with Richemont. So for more, let's bring in our senior luxury analyst at Bloomberg Intelligence, Deborah Aitken. Deborah, great to have you on the programme. So we're mostly through the results season. So I was interested to see if you could kind of sum up where we are in terms of growth and what we can expect for 2022 in this sector.
Indeed, we are, and I would say that growth overall and the outlook is more positive than we might have expected in around March, April this year. So what we've seen so far, what we're doing here is we're comparing against 2019, because 2020 was really when many stores were closed. Mm-hmm. So we're looking at around, for the Q3, 40% growth and 63% EPS growth, and that translates over the 9 months to around 32% growth on sales and 61% growth on EPS. So if I pull that into 2019, we're then looking at very high single-digit growth versus 2019 and teens in earnings growth, net profit growth for the sector as a whole.
Okay, so that for the luxury sector. In terms of the outliers, Burberry's share price, for example, slumped. Burberry, Ferragamo, tell me about how they've been doing.
They did. So they were two of the most recent to report. Both of those companies headed into the pandemic very much in strategy overhaul stage, and the pandemic, of course, slowed that down, disrupted them more than others. So in the Q3, Burberry didn't do so well in China, still positive, but didn't do so well, probably because they also don't have as much of an e-commerce footprint there. And then the other side of it for Burberry is that we're looking at comparable store sales as a comp versus 2019. We saw it in Q2 of 1%. We saw it again in the calendar Q3 of 1% again, but with fuller price sales not as strong as they were. So some need there for some cost cutting, some price cutting, discounting, and that hampered them. And then if we go to Ferragamo, so they are on minus 10% versus 3Q 2019 calendarized. And what we're looking at there is the fact that this company was all about closing some of the stores, closing wholesale, relocating, reorganizing their product portfolio. So that has hampered them. But overall, both companies have moved forward, but not as strongly as the rest of the sector.
No, I mean, and Richemont, look, operating margin at 21.9%. The estimate was for just under 17%. I mean, they've had a huge operating profit beat for Richemont, and yet their online offering is quite tricky for them.
Well, I think, 620 basis points of operating margin improvement, and that's versus 2019. So we're looking again at that, and it's driven by Cartier predominantly. It pulls a huge amount of growth and also of profits. Cartier, Van Cleef and Arpels Boucheron. If we look at those all together, the jewellery division is up 41% versus half on 2019. So it's a huge beat, and it's where we have pent-up demand. So there's some stores are closed, but they're working their way through, with the big jewellery showrooms, the watches showrooms. You can go in there and have specialist appointments. There is still a lot being sold online, though. We'd all be surprised. I remember when Cartier initially, at the end of last year, went on to Tmall Luxury Pavilion in China. The growth rates were phenomenal. So there's a huge demand. But we're seeing it come in all directions, really.
Deborah, thanks so much for being with me. Deborah Aitken there is our senior luxury analyst at Bloomberg Intelligence, taking us through the luxury sector after Richemont's earnings were the latest to drop this morning. This is Bloomberg.
This is a Bloomberg Money Minute. Like many businesses, the pandemic had an impact on photography. During a period when nobody was venturing out, traveling, going to weddings, or just having fun, picture-taking took a hit. And that took a toll on professional photographers and related companies. Think school photos.
With schools closed, the volume of demand for school photos fell by about 50%.
Hillary Schneider, the CEO of Shutterfly, which owns school photography company Lifetouch. Fast forward to now.
The good news is school's back, and the business is coming back in a torrential way.
And Schneider says the plus to pandemic lockdowns was that people had time to put together photo books, so that part of Shutterfly's business grew. But on the flip side,
long-term creation of photo books is tied to how much travel you do and major life events that you celebrate.
But there may be light at the end of that tunnel as travel comes back and postponed weddings are rescheduled. Steve Potusk, Bloomberg Radio.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
This is a Bloomberg Money Minute. Microsoft's Windows operating system is headed for the cloud, joining its 365 family of cloud-based software products. Bloomberg technology reporter Dina Bass explains.
Your version of Windows, the apps you use, your settings will all be stored in Microsoft's cloud and projected down to whatever computer or tablet you want to run it on.
Even on non-Microsoft devices like iPads and Android-based laptops and tablets.
Technically, it can work on smartphones, but when I asked Microsoft, they said they didn't think it would be a great experience because of the small screen.
For users, it means greater convenience. For employers, it means easier access for remote or hybrid workers and the ability to provide temporary virtual computers to contractors and interns.
You want to quickly get somebody up to speed on your corporate software and your corporate network, but you want to also be able, when they're done with the job or they're done with their internship, to just wipe the device that they were using.
Larry Kofsky, Bloomberg Radio.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a Bloomberg Money Minute. Getting your dog genetically tested is breeding big business.
We raised $75 million, led by SoftBank.
Ryan Boyko, CEO of Embark Veterinary, says it's like 23andMe for Bella and Bailey.
Instead of spitting in the tube, you use a little swab to swab their cheek.
Knowing what kind of dog you have can alert you to hundreds of medical, dietary, and environmental risks and also help you find your dog's relatives.
A lot of people wind up meeting their dog's relatives for play dates.
Boyko says the doggy DNA business is superior to human DNA. Dogs care less about privacy, live their lives 7 times faster, and
you actually can study the interaction between genes and the environment better. And so the pace at which you can advance veterinary medicine is much faster than with human DNA testing.
The investment in pet health companies is also happening pretty fast. Case in point, the online pet pharmacy Mix Lab just got a new $20 million investment. Denise Pellegrini, Bloomberg Radio.
If trying to figure out the future of your business is keeping you up at night,
Are you seeing it come back at all?
at least you have company.
You're hoping to get political pressure.
Do you expect the euro to strengthen? Why even have this hearing?
Bloomberg Radio. Bloomberg. The world is listening.
Broadcasting live to London on DAB Digital Radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
And it's 7:30 a.m. here in London. I'm Caroline Hepker. Warm welcome to Bloomberg Daybreak Europe. In a moment, we're going to analyse the promises and pledges from different countries at COP26, what that means in reality. That is with Beringer, their political economist, Caspian Conran, will be joining me. He was with us at the start of COP26 and he's returning towards the end of COP26 to tell us more. Right, let's go to the markets briefly because yields are nudging higher. Bond curves flattening. The US back after a holiday, reacting to Wednesday's CPI number. In Europe, inflation is soaring too, but it's also diverging the most in years, really since the sovereign debt crisis. That makes the ECB's job even harder. Also, though, in terms of markets right now, gas prices in Europe jumping 5%. Unplanned outages from Norway. It's an ongoing story, of course, as we go into winter. As for stock market futures, rather, Euro Stoxx 50 futures in the red, S&P 500 E-mini futures up 0.1%. And just just lastly, oil, gold, Bitcoin, all lower this morning. Right, that's a look at the markets. Let's go to our top stories now. More than 220,000 job adverts were posted in the UK. That's just during the first week of this month. That is the fourth highest figure since the start of 2020. All of this according to the Recruitment and Employment Confederation. Now, it takes the total number of active job adverts to a record 2.68 million. Meanwhile, Brexit news this morning. There'll be more high-level talks today as efforts step up to resolve issues around trade with Northern Ireland. The Brexit Minister David Frost is meeting the Vice President of the European Commission, Maros Sefcovic, in London. It'll be the fourth attempt now to try to come to a resolution on things like reducing checks on goods and the removal of oversight from the European Court of Justice. And top corporate news this morning, Alibaba's Singles Day shopping festival posted record sales of close to $85 billion, offering China's e-commerce giant a boost following a year of heightened regulatory scrutiny. Now, the strong performance could ease concerns among investors who are grappling with a 30% slump in Alibaba's shares this year. The company was hit with a record $2.8 billion antitrust fine, and it also reported its first revenue miss in 2 years. Right, those are a few of our top stories this morning. Let's get over to Bloomberg's Leanne Gerrans with all the latest in world news and something out of China this morning. Good morning, Leanne.
Yes, indeed, Caroline, and we'll start right there. So the President Xi Jinping has won a mandate to potentially rule for life as a major political meeting wraps up in Beijing. Xi delivered the first document of Communist Party history by a Chinese leader in 40 years, joining only Mao Zedong and Deng Xiaoping. An official statement highlighted Xi's common prosperity drive and efforts to promote self-reliance in both science and technology. Now, Russia may be planning to invade Ukraine. That is a warning to Europe from the US. Bloomberg's Sarah Rapp has more.
Tensions with Moscow and the bloc over migrants and energy supplies are heating up. Now, the U.S. is sounding the alarm with European Union allies that Russia may be weighing a potential invasion of Ukraine. U.S. officials have briefed their EU counterparts on concerns over a possible military operation as Russian forces increase near the Ukrainian border. The assessments are believed to be based on information that America has not yet shared with Europe, which would have to happen before a collective response is reached. In London, I'm Sarah Rapp, Bloomberg Daybreak Europe.
The Austrian region with the highest coronavirus infection rate is planning a lockdown for unvaccinated people as countries in Central Europe struggle with COVID. However, the country's chancellor says he's ruled out a lockdown for the vaccinated. In Asia, Beijing is asking for activities to be moved online as the city experiences more infections than at any time in the past 17 months. Meanwhile, some parts of the US are starting to see the impact of an autumn wave of COVID, with the healthcare system under serious pressure. And in Singapore, COVID patients who choose not to get vaccinated could face high medical bills. Bloomberg's Juliet Sali reports.
Coronavirus patients who need both care in the ICU and therapeutics in hospitals may have to pay about $18,460. This according to a median estimate released by the Health Ministry in response to Bloomberg News queries. Throughout the pandemic, the Singapore government has covered these treatment costs, but will start charging the unvaccinated from next month. Unvaccinated patients make up a large majority of those who need intensive care, putting strain on Singapore's healthcare resources. In Singapore, I'm Juliet Sali, Bloomberg Daybreak Europe.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Thank you so much, Leanne Gerrans, with the world news. Now, in the early hours of Wednesday, the UK published the COP26 draft overarching cover decision for the climate summit. And COP26 President Alok Sharma has said that the deadline is tonight at 6 6 p.m. for national governments to scrutinise the wording, come to a decision. So after all the commitments, wrangling that is still ongoing, how much closer is the world to avoiding a devastating rise in temperatures on paper and in practice? Joining us this morning is political economist Caspian Conran from Beringa, who have a real-time index that tracks the credibility and durability of countries' emissions commitments. Caspian, welcome back to the programme. We had you on one of our programmes at the start of COP26, so I was curious to come back and ask you what you think has happened during this COP26 fortnight. What has changed?
Yeah, thanks for having me back. It's great to be back. I think if I was to characterise COP26, in many respects, we haven't seen the great progress of Paris, but equally we've seen more substance than Madrid. And I think it's that nuance that we now need to look at when we're looking at the final text tonight. I think in many respects, this wasn't a great conference for multilateralism, and we shouldn't expect huge step changes in the official draft document this evening. But where there has been real progress is in bilateral deals. And in many respects, this conference has been characterized by coalitions of the willing rather than great, large documents and multilateral agreements that we saw during Paris. The obvious example being around coal bans, bilateral agreements on methane, the deforestation agreement. Now, there's weaknesses to that sorry.
Well, I was just going to jump in because actually we've had a few new lines, a bit of fresh information here, because the UN has just published the latest draft of the COP26 communique. So I'm looking at this on the Bloomberg terminal this morning. So the draft now calls for the phase out of inefficient fossil subsidies and also for the phase out of unabated coal power. So that's a bit of updated language when it comes to the draft COP26 communique. But yes, as you were saying there, Caspian, just in terms of how much progress has been made, I mean, there is still much to be played for, isn't there, as we can see from the kind of the moving language here. Do you think that there will be something more substantial by the end, perhaps, of play today or perhaps even over the weekend?
As I say, I think the big substance has come from unilateral decisions from national determinations, but also these bilateral accords. It may be that there's a last-minute breakthrough, and clearly Johnson is talking about returning to the conference to try to eke out potential last-minute moves. I wouldn't hold out for huge progress in the final text, but I think it would be wrong to totally judge this conference by that final text, if you like. We have seen real meaningful progress through coalitions of the willing, and yes, many members have taken opt-outs from that and will struggle with any final wording, which everyone has to agree with. But we would be wrong to totally judge the outcome of COP26 on those final determinations of that wording. I mean, for example...
What about, though, I was going to ask you about the 1.5 degrees Celsius. This, trying to keep global warming down to that Paris agreed sort of level. How likely is that, according to your sort of calculations?
So I don't think we're there. We're nowhere near 1.5 degree. And of course, Paris hoped for the exact wording was well below 2 degree, moving us towards a 1.5 degree target. I think there's an argument at this point that we're close to 2 degree on those emission national pledges, if you like. But the policy gap, i.e. the outline of are countries really credible in those targets, is really the big question. So there's two real problems at the moment. The first, in terms of credibility, is that short-term outline to 2030 doesn't really have the robust policies and targets to give credibility to those longer-term 2050, 2070, in the case of India, net zero targets. And that's what a lot of the international community are worried about, right? It is relatively easy to come, or easier, if you like, to come with long-dated targets without the policy substance to maybe give those targets credibility. But what we wanted to see in this conference was real concrete steps to 2030. And the general expectation is we need to halve emissions by 2030 to give us any hope of being in a Paris 1.5 aligned world by the end of the century.
OK. Caspian, thank you so much for being with me. That is political economist Caspian Conran from Beringa there, joining me on his assessment of COP26 and the credibility, durability of countries' emissions commitments. So my thanks to him. Coming up next, Ulrich Luckman will be joining me here on Bloomberg Radio.
This is a Bloomberg Money Minute.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Minutes. The combination of economic recovery and worry over supply snags causing shortages of all sorts of products is prompting parents to buy presents for their kids far earlier than usual this year. And the reason is understandable.
The toy industry as a whole is a category where parents will always prioritize.
Enon Kreis, CEO of Mattel, says his company is working to meet 100% of demand for especially the most popular toys this year, especially for the procrastinators. His company and the industry at large are doing all they can.
We accelerated procurement of raw material, we expedited production, we contracted capacity and shipping lanes in advance, we secured rates that allowed us to put plans in motion.
Kreis says one way the toy business is financing all these supply chain gymnastics is something you'll notice if you haven't already: higher prices.
We raised prices in the third quarter, and we're also taking cost-saving actions.
The toy industry's bet is that pricier presents are always preferable to missing presents. Andrew O'Day, Bloomberg Radio.
This is a Bloomberg Money Minute. Another headache for the restaurant industry.
So American restaurant chains are really struggling right now to get the kitchen equipment that they need, especially to open new locations.
Leslie Patton wrote the story for Bloomberg News.
They can't get an oven or a fryer, and obviously you need that stuff for a restaurant.
And the concern for big chains is that it could be another impediment to expansion.
Papa John's mentioned it on their latest earnings call. Specifically, they're having trouble getting ovens and walk-in coolers for pizzas.
All of this, another casualty of massive supply chain disruptions. On top of that, throw in labor shortages.
So we're talking cooks, cashiers, servers, dishwashers. All of these positions are in really high demand right now.
And while wages have been going up across the industry, it's still not bringing in enough workers. I'm Charlie Pellett, Bloomberg Radio.
We used to take our freedom of movement for granted. Not anymore.
It's not just the people who work for the airlines.
And it's natural to feel grateful for the things that kept you going.
Does America have a chance to lose our advantage?
Can we get to herd immunity fast enough so that we'll be in good shape?
But really, we were just doing our jobs.
Oxford University is starting a study on patients who've recovered from COVID.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
This is a Bloomberg Money Minute. Americans love football, and we've been watching a lot more of those NFL games this season.
They're averaging 16.6 million viewers per game. That's an 11% increase from 2020.
That's reporter Chris Palmieri, who covers media for Bloomberg, and he says there are good reasons why so many of us are tuning in, like good matchups, familiar names and new ones, and the return of live fans, lending a sense of normalcy to the season.
It seems counterintuitive that it would make a difference if you're sitting at home, whether there's people in the stadiums or not. But viewership at home is up when there's more people in the stands cheering.
And it's not just football fans who are happy.
This came in a year when all of the big four broadcasters and Amazon locked in these long-term contracts, 11 years, committing over $100 billion to NFL. And right now, at least, it looks like that was a good bet.
Tom Busby, Bloomberg Radio.
The private equity space is more competitive than ever before. Successful transactions require quality, speed, and efficiency. Closing a deal is just the beginning. That's why Witham is dedicated to the entire life cycle of your investment. Private equity investors trust Witham to bring thoughtful financial insights, tax structuring, integration, and cyber risk mitigation to strengthen value creation. Experience the Witham way. Visit witham.com/PE. Witham.
The news you need from across the globe on Bloomberg Daybreak.
This is Karen Moscow.
And I'm John Tucker. Join us today at 5 a.m. on Bloomberg Daybreak.
We get the latest on the vaccination effort with Andy Pecos of Johns Hopkins, and we wrap up the trading week on Wall Street.
And how will the Biden administration tackle inflation? The latest from Bloomberg Government's Emily Wilkins.
Bloomberg Daybreak, weekday mornings at 5 on Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com.
Influential conversations from Bloomberg Television. Here's Manus Cranny.
Joining Danny and myself now is Anna Stupnitska, Fidelity International global macroeconomist. Thank you so much for being with us. We've been communicating globally about where we are on the inflation landscape. We're seeing levels around the world, the highest since the 1990s, 1977 if you look at the PPI in Germany. Anna, are we looking at central banks that are inflation deniers?
This is a Bloomberg Money Minute. Retailers nationwide are waiting anxiously for holiday shopping to begin, and Deloitte has forecast 7% to 9% growth in holiday sales this season. And according to their recent survey, shoppers are ready to get out of the house.
From 2016, we've seen a gap really widen where more people are shopping online and spending money online for holiday. This year, the numbers actually for online is down slightly, and people are planning to go in-store a little bit more.
Kate Ferreira is a spokesperson for Deloitte, which releases an annual survey of U.S. holiday shoppers.
33% of our respondents said they will go, spend time in stores this year, whereas last year it was only 28%. And we think, obviously primarily that was due to COVID.
The sales expansion will mostly be fueled by wealthier consumers who have seen their savings rise during the pandemic. Spending among lower-income Americans, meanwhile, is expected to fall 22% compared to last year. Ann Mostu, Bloomberg Radio.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters here in London, I'm Caroline Hepker with this Bloomberg Radio Business Flash. US yields are nudging higher, the bond curve flattening. The US back after a holiday, reacting to that Wednesday CPI number. This morning, the two-year yield for the US up by 2 basis points this morning. Also, Aussie five-year yield up a couple of basis points as well. So we're watching that. In Europe, of course, the inflation picture, yes, it is soaring in terms of price rises across the euro area, but it is also diverging, and that makes the job of the ECB much more tricky. As for gas prices, we're seeing a big jump there too. For European gas prices up by 5.1%. That story around the energy crisis in Europe continues. This as flows from Norway. Unplanned outages mean that flows from Norway, which is a big deliverer of energy in Europe, also hurt the market. Iron ore down by 4.8% this morning. We see Brent crude also dropping 0.8%, along with WTI crude futures. As for the stock markets, fairly positive in Asia. Shanghai comp, Shenzhen comp higher. CSI 300 just the one in the red, down 0.2%. Looking at the futures, US Stocks 50 futures for the open in just a few minutes' time here in Europe in the red. S&P 500 EMI futures up by 0.1%. Gold and Bitcoin both down this morning. That is a Bloomberg Radio Business Flash. And here's Leanne Gerrans with more on what's going on around the world. Hi, Leanne.
Good morning, Caroline, and thank you. In Turkey, President Erdogan is accusing Greece of intercepting boats of refugees to push them back towards Turkey. I don't know what Greece will do if it opens its doors, the president said in a thinly veiled reminder of his threat to unleash a migrant crisis. The EU is coming under mounting pressure over migrants seeking to reach Europe. Now it's thought a record number of migrants have crossed the English Channel in a single day. It's reported around 1,000 people made the journey from France to the southeast coast of England. That was yesterday. Lifeboat and border force crews were working well into the evening. And finally, the Bank of England's Catherine Mann has said that the hybrid model of work could widen the gender gap by opening up 2 tracks, those in the office and people who do remain at home. Mann also said being seen in person is an important way for people to build careers, and working from home makes that visibility more difficult. She added that the pandemic has left more women at home because of childcare issues. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Caroline.
I think that is fascinating what Catherine Mann said, and I am having a tussle with myself about whether there is a point for Catherine Mann to make this statement. Do people not thread the needle, join the dots? Nurseries closing in the pandemic, some of the most expensive childcare in the world in the UK, and then the need for FaceTime in the office. Rishi Sunak has talked about it, and so on. But perhaps there is a need to say it if people aren't kind of making those links.
Caroline, it's quite amazing, isn't it? We were just discussing this in the break before we came back on air. Yes, we were. And we were saying, isn't this obvious? Do people not know this? But clearly it's not breaking through like we probably think it does, because it might be a conversation we have all the time together, but not a conversation to a wider audience. And as you do say, what is the importance of coming into the office, especially when it comes to our gender pay gap? Will we be paid less because we're less visible at home? Will people coming into the office, get a really boost to their wages? And she's also saying, Catherine Mann, that physical presence is so important, those water cooler moments we have. But also she's saying that, we need to know the challenges and women's life cycles in the workplace. That's childbearing, and it's also menopause, which does come a little bit later on in life. But these all impact the work environment.
Yeah, I think it's a fascinating conversation. So thank you for bringing us those comments from Catherine Mann, of course, leading female economist in the UK. Right, let's go on to talk a bit more about the markets, though, more broadly. So the greenback and greenback bulls seem to be confident that the dollar is going to do well in 2022, of course, after Wednesday's inflation report. Joining me now, Commerzbank Head of FX Research, Ulrich Luchtmann. Good morning. Thank you so much, Ulrich, for being with me. So the dollar strengthened this morning. How long does that run last for then?
Well, Caroline, I think what we are seeing at the moment is that the high U.S. inflation numbers that we got recently are increasing the perception of the market that the Fed will react more forcefully on these high inflation numbers with interest rate hikes in 2022 than many other central banks. Perhaps not than the Bank of England, but certainly more than, for example, the ECB. The Fed, in the market's perspective, is more reactive on that one. And therefore, net-net, despite the fact that inflation per se is something which should be negative for a currency, this is high inflation numbers that we are seeing up US dollar positive because the market thinks that the Fed will be so reactive.
So forcing the Fed's hand effectively then. So how soon, how fast, what does the rate, the QE and the rate path ahead look like to you now?
Well, at the moment, frankly, we are still in the camp who believe that this inflation bout is something which is transitory. And we are believing that inflation will come back quite significantly. But this is something which will be proven not this month, not next month. It will take a quarter or something like that before this can be seen in the inflation data. And therefore, until then, I think the dollar has still some way to go if these inflation expectations keep high. Don't forget, in recent weeks, we saw a little bit more skepticism in the market about this impact on inflation. The market was leaning more to our Commerzbank view, but the new inflation numbers certainly ended this phase, and therefore the market is still running into the direction of high inflation and the Fed being more reactive than others.
Okay. What about the ECB then, in terms of forward guidance? Is that holding up, especially when it comes to the euro and your view there? Because inflation is soaring across Europe too, and it's also diverging markedly between different countries, and a lot of very tricky problems for the ECB.
Sure. Look, I mean, first of all, this inflation problem in the Eurozone is not as large as in the US. We are seeing very clearly that in countries and currency areas where inflation was lower before the pandemic, now this inflation shock is not as significant. Look at Japan, where you see nearly nothing of inflation. Look at Switzerland, where inflation has been lower. The impact now of this inflation bout is smaller. And this is proving, from my point of view, that inflation expectations play a large role, where people were used to higher price increases. Now prices can increase more. And therefore, for the ECB, the problem is not as large. But the most important point is, I think, the market is not believing in the ECB's forward guidance anymore. Because otherwise the market would not price in rate hikes as early as 22. And the reason, from my point of view, is that the market is not believing in the ECB's view of transitory inflation. Therefore, the market is believing that the ECB's forward guidance is based on wrong assumptions. I'm not in the camp who believes that this is true, but this is something which, again, only will prove to be right or wrong later, further down the road.
Yes, interesting. Yeah, that's we've got some time to see which way the trade goes. Well, look, what is your top bet then in terms of FX markets as we go, into the end of the year? Carry trade, is that still, one of the best places to be? What are you looking at?
It's not so much about actual carry, not so much about current interest rates, because look, I mean, interest rates still are basically at the lower bounds in most of the G10 currencies. It's more about the outlook of carry evolving in 2022. And this is what's driving the FX market. And if this inflation story still goes on in the US, I think we will have to expect that the dollar will end this year very much on the strong side.
And a word on the sort of, perhaps it's idiosyncratic risk, although I guess it's risk of conflict, so it's significant. The ruble reversing gains this morning, trading 0.3% lower against the dollar. The US warning about, troops massing and perhaps Russia invading Ukraine. What does that mean for currency traders now, looking at Eastern Europe?
Well, sure. I mean, we had the experience of the invasion of the Crimea with sanctions coming on, which were significant in an economic sense for Russia, and therefore, sure, people are fearing that we would see a repetition of this story. The Russian central bank so far has done a very good job in raising rates preemptively, in being very sensitive on the inflation story, but they cannot cope with this kind of risk. They cannot counter this kind of risk. It would not make sense for them to counter this effect on ruble that is coming from purely political, from the political side. The central bank cannot run the foreign policy of Russia, and therefore this is something which is fully impacting ruble.
Okay, yeah, we're down 0.4% at the moment on the Russian ruble, trading 71.89. Ulrich, thank you so much for being with me. Ulrich Luckmann is the head of FX research at Commerzbank there, taking us through the big FX stories this morning. You're listening to Bloomberg Daybreak Europe, the start of European trading next with Anna Edwards. This is Bloomberg.
No company wants to...
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
This can-do government, this government that got Brexit done, that's getting the COVID vaccine rollout done, is going to get social care done.
Boris Johnson's talked about his intention to create higher paying jobs.
Growth is going to surprise significantly in Q4, Q1 and next year.
The economy is back from the brink, but not completely out of the woods.
Bloomberg Daybreak Europe on Bloomberg Radio.
Good morning from London. I'm Anna Edwards. You're listening to Daybreak Europe live on London DAB Digital Radio. It's just gone 8 o'clock here in London, which means European equity markets should at any moment be getting into their stride and giving us some opening movements. Not seeing any particular opening movements at the moment. The IBEX appears to be down in Spain, down by 0.2%, but not getting the opening prices for the other markets just yet. US futures have been pointing a little to the upside as we've been going through the early hours
of this morning. And just recapping what we saw yesterday, the US markets looked fairly mixed. We saw some recovery in technology stocks. The European picture was more positive. That's the backdrop to today's session. So waiting for European equity markets to get into their stride. Let's just check what's going on other markets for you. We've got oil prices down this morning. 82.26 is where we trade, down by 0.7% on oil. We also have the gold price a little bit weaker, 1857 a troy ounce, down by 0.3%. A big focus for gold this week, of course, around the inflation conversation and the very high inflation print, the more than 30-year high on inflation that we saw coming through from the United States in the middle of this week. The yield on the US 10-year then reacting to the same news flow, essentially, and we have that at 1.56% right now. So we have seen a move upwards in yields, bonds selling, a move upwards in yields as a result of that high inflation print earlier on this week. The dollar is a little weaker this morning. The dollar index down by 0.1% or so, but still dollar strength has been something of a theme for markets in recent sessions. We're just starting to get some of those opening prices for European equity markets, and the Stock 600 is up by 0.1%. The FTSE 100 is up by 0.2%. So as I say, just getting the early start to trade here in Europe this 8 o'clock this morning, and we're now filling in some of those gaps. The CAC 40 up by 0.2%, still waiting for the Xetra DAX to open. Just looking at the breakdown of the various sectors, I can see that consumer products and services is the biggest sector moving to the upside here in Europe. And I'm just looking to see whether any of the luxury names are to the upside, because we have had some good numbers coming through from Richemont. And so we see some read across into Swatch Group, that's up by 3%. Burberry rebounding up by 2% today. Hermes, LVMH, all to the upside. So we'll keep an eye on the luxury sector. Let's get into a conversation now around the stocks that we are watching and start right there, shall we, with Richemont. Bloomberg's Joe Easton joins us down the line with a look at some of the stocks in focus. And let's start with Richemont then. Joe, what's the story?
That's right. So it's a strong report, as you mentioned there. Pretty good sales, up around 60% compared to last year, but also importantly against the pre-pandemic levels, up around 20%, so against 2019. This is mainly coming from watches, which has been really strong. And I think what's happening is people with, extra cash tucked away that they aren't spending on the services and kind of holidays that they had been spending that money on. They're splashing out on these big ticket items like watches. We've also seen a few other companies, even this week, reporting good results. Watches of Switzerland jumped after their reports in London. So good on the watches, and they're also in talks to sell part of the Net-a-Porter online retailer. This is upcoming amid pressure from the activist investor Dan Logan, who's been pushing for them to do this. So this is a positive report. Still waiting for some volume in that one, but we'd expect Richemont to move higher with those peers that you just mentioned there.
Yeah, absolutely. So we'll watch to see what we get on the opening price of Richemont. Nothing yet. We will backtrack to that one. Also, I don't have an opening price yet on AstraZeneca either, but AstraZeneca putting out earnings numbers. The backward-looking stuff, the quarter just gone, did look to be a little bit below what markets were looking for, but they're trying to reassure on the full year.
That's right. So it is a miss on the EPS. In terms of the revenue, obviously a lot of this is coming from the COVID vaccine, but that is obviously done at cost, so there's no real impact on the EPS there. Also, prior to the pandemic, Astra was really trying to become a big oncology giant, so a lot of their cancer drugs were the focus. And actually, some of those areas have been the underperformers amid some competition, particularly in Asia and among some new generic drugs that are coming on. So the core EPS has missed by about 13%, and investors are thinking Astra is now going to have to invest a lot of money, spend a lot of money to get new oncology drugs and rebuild that portfolio as that COVID-19 sales tailwind ends, or at least slows down, and that's going to weigh further on the earnings. So it does look negative. But as you say, again, still waiting for a price for Astra.
Yeah, waiting for a price there. Waiting also for a price on Intertrust. This a Dutch business, I think, Amsterdam listed. Tell me a bit more about this business, not one we talk about very often.
Yeah, so this is legal services, tax and trust administration, that kind of thing for financial services. So potentially goes off the radar a bit in terms of our coverage. But they've had a takeover offer from the US private equity giant CVC. That's at 18 euros a share, and the stock closed at 12.56 yesterday. So we're going to get a big jump in that one. Again, there's an activist level here, an activist element. There's a company called Hawk Ridge over in Los Angeles who's been telling this firm, Intertrust, that they need to step up in terms of their performance. So I think this is probably a result of that. We are waiting for that one to come through, but I can tell you we're seeing AstraZeneca now down 5% on that negative EPS miss. Richemont jumping 9%. So again, finally getting some prices there. Those two stocks going the other way and still waiting for Intertrust.
That's a big move in the Richemont share price, isn't it, for a business the size of Richemont, with a market cap, if you take it into dollars, around $83 billion US. So certainly keep an eye on that one. But Richemont, as you say, moving strongly to the upside. Astra moves a little lower. Thank you very much, Joe, for joining us. Bloomberg's Joe Easton with a look at some of the stocks that we're watching. Let's get to our top stories this morning. British companies are still struggling to recruit staff as the labour market shows no signs of cooling. Bloomberg's Ewan Potts has the story for us.
Driving instructors, prison officers and forklift truck drivers, three of the job categories seeing the biggest increase in demand at the start of this month. According to a survey by the Recruitment and Employment Confederation, more than 220,000 job adverts were posted during the first week of November. That's the fourth highest figure since the start of 2020, and that takes the total number of active job postings to a record 2.68 million. In London, I'm Ewan Potts, Bloomberg Daybreak Europe.
And inflation pain also continues. The British Chambers of Commerce says 80% of UK businesses are feeling the effects of higher prices as well as shortages of goods and workers. The lobby group surveyed 1,000 companies. Firms cited rising costs of vehicle fuel, shipping containers, electricity and natural gas as the biggest burdens. On to the Brexit latest. In post-Brexit news, I guess, this morning, Brexit Minister David Frost is meeting the Vice President of the European Commission, that is Maros Sefcovic, in London today. It'll be the fourth attempt now to come to a resolution on the issues around trade for Northern Ireland. There is growing speculation that the government could use a get-out clause from the deal with the EU in the coming weeks. Frost told the House of Lords on Wednesday that triggering the so-called Article 16 of the Northern Ireland Protocol would be the UK's only option if the dispute was not resolved.
They seem to be claiming that it would be entirely unreasonable for the British government to use these wholly legitimate safeguard provisions within the treaty. I gently suggest that our European friends should stay calm and keep things in proportion.
Frost went on to say, in his view, this talk process has not reached its end. So we'll continue to watch that. Now, over in Glasgow, climate talks at COP26 are entering the final stage, but negotiators are still far apart on several key issues. Bloomberg's George Shanker has the details.
Creating a global carbon market is considered a benchmark for the summit's success, but negotiators have tried and failed to nail an agreement on the issue since 2015, and talks on making it happen at this year's summit have run into new obstacles. Sources say countries cannot agree on how to account for emissions credits that get sold in the global market. Discussions continue today, with less than 24 hours to go until the summit is due to wrap up. In Glasgow, George Shanker, Bloomberg Daybreak Europe.
And we have, just in the last half hour or so, received a new draft from the United Nations. Our colleagues at Bloomberg News citing that, saying the new draft calls for a phase-out of coal and more money. But some of the language around the coal mentions being watered down a little, so we'll look for updates there. On to matters to do with central banks over in the United States. The White House isn't worried about Jerome Powell's trading history. Bloomberg has been told officials don't believe the Fed chair's sale of shares in a stock index fund last year disqualifies him from being appointed to a second term. Powell sold a stock index fund worth between $1 million and $5 million last October, but our sources say some within the administration who support Lael Brainard still have concerns about that trade. And in shopping news, Chinese corporate news flow as well. In top corporate news, as we mentioned a little earlier, sales for Alibaba's Singles Day shopping festival were a record $84.5 billion. We get the latest from Bloomberg's Rosalind Chin.
Singles Day has come to dwarf US Black Friday and Cyber Monday in both intensity and size. Even so, this year's festivities were more low-key after a year of regulatory scrutiny and a record $2.8 billion antitrust fine. Before this year's event, Beijing called on domestic e-commerce platforms to curb marketing spam via text messages and to refrain from unfair pricing. And Rosalind Chin in Hong Kong, Bloomberg Daybreak Europe.
Thanks to Rosalind Chin for the update there. Let's get the global news flow then and get to Bloomberg's Leanne Gerrans. Good morning, Leanne.
Anna, good morning and thank you. Chinese President Xi Jinping has won a mandate to potentially rule for life as a major political meeting wraps up in Beijing. Bloomberg's Jenny Marsh has all the details.
China has reached a new historical starting point, led by President Xi Jinping. Xi has delivered the first doctrine on Communist Party history by a Chinese leader in 40 years, joining only Mao Zedong and Deng Xiaoping. The document did not focus on past wrongs. Instead, it highlighted the achievements to unite the will and action of the party. This week's plenum was one of 7 major meetings in China's 5-year political cycle and regarded as the most important. In Hong Kong, I'm Jenny Marsh, Bloomberg Daybreak Europe.
The US is warning Europe that Russia may be planning to invade Ukraine. Tensions are flaring between Moscow and the EU over migrants and energy supplies. Sources tell us Washington is monitoring a buildup of Russian forces near the Ukrainian border. Meanwhile, German Chancellor Angela Merkel spoke with Russia's President Vladimir Putin for a second day in a row over the escalating situation on the EU's eastern border. That is after Belarus threatened to shut down a key pipeline carrying Russian gas to the European Union, escalating a migrant dispute. Over in the US, an appeals court has temporarily denied a bid by US Capitol riot investigators to access former President Donald Trump's White House records. Bloomberg's Ed Baxter has more.
It is a temporary hold on the release of the presidential diaries, call logs, and other records that's being requested by the House investigation. After a previous ruling, the National Archives was set to release the papers today, but this ruling delays that potential until arguments can be heard November 30th. The issue is executive privilege and whether it extends after a person leaves office. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak Europe.
And Mexico's central bank has raised interest rates by a quarter point for a 4th consecutive meeting as it attempts to slow inflation that has remained around 6% since April. Elsewhere, Peru also tightened policy for a 4th straight month as it sees inflation accelerate. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Anna.
Leanne, thank you very much. Now, still ahead on Bloomberg Daybreak Europe. Luxury pays off. Richemont sees a first-half operating profit beat as earnings exceed pre-pandemic levels. As we were hearing at the top of the programme from our colleague Joe Easton, it seems sales of watches have held up pretty well. How is this business doing in China in relation to others? There have been a few businesses raising some flags around China, the common prosperity drive there. How does that rub up against the luxury sector? We'll talk more about that next. We are live from our European headquarters in London. This is Bloomberg.
He was the heart of...
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Your family, and he taught you our history. He helped you fix your first flat. He was the best backyard DJ around. And every time he'd tell a story, he'd own the room. But now more than ever, he may feel alone. Today, older adults and their loved ones are struggling to connect, in a time when connection has never been more important. But there is something we can do. Embrace our older loved ones through StoryCorps Connect. With StoryCorps Connect, you can honor seniors remotely with an interview about their life. Every interview will be archived at the Library of Congress, becoming part of American history, so that years from now, future generations can listen in.
All right, Grandpa, what's one piece of advice you have for me?
Just 3 words, sweetheart. Live with courage. The man that had the best stories still has plenty of stories to tell. So connect virtually and share the conversation of a lifetime at StoryCorpsConnect.org/AARP. Connect, honor, share. StoryCorps Connect. A message from AARP, StoryCorps, and the Ad Council.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, including natural disasters, financial fraud, pension issues, and economic disruption. So while America rebuilds, BAM has you covered. BAM. Build America Mutual. Talk to your investment advisor or visit buildamerica.com.
Mom was always very organized.
But my sister and I noticed she started to forget things.
Telling my girls about my Alzheimer's diagnosis was hard.
But Mom's early detection gave us time to make a plan.
My sister and I were there for Mom and each other.
If you or your family are noticing changes, it could be Alzheimer's. Talk about seeing a doctor together. For more information, visit alz.org/time to talk. A message from the Alzheimer's Association and the Ad Council.
Influential conversations from Bloomberg Television. Here's Anna Edwards.
Let's get the thoughts of Jeremy Stretch, CIBC's head of G10FX strategy, who joins us now. Jeremy, really nice to speak to you. So what was your big takeaway from the inflation print? Yes, it was eye-watering, in the words of some at the Fed, but we knew it was going to be a very high print. Around 6% was always the expectation. Yes, it was higher than anticipated, but what did you really take away from that number yesterday, Jeremy?
Well, you're absolutely right. It was an eye-watering number. I think they're also underlining, and I think it does seem increasingly likely that we're not quite at the peak of the inflation spike just yet. So it does seem as though this supply shock or this drive in price pressures still has a little bit further to run, and we could well still find ourselves looking at very elevated price pressures by the first quarter of next year. And I think that is going to test the resolve of the Fed. So I think it is that disconnect between the inflation spike and whether the Fed can hold its nerve in terms of the policy backdrop that I think is going to be the primary determinant over the course of the next few months. And I think ultimately the market has perhaps got a little bit ahead of itself in terms of moving up that hiking timing to July. But nevertheless, in terms of core PCE, which is going to continue to move higher, as I say, that Fed resolve is going to be tested.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings. Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters, I'm Anna Edwards with this Bloomberg Radio Business Flash. European equity markets making very modest gains, up 0.1%. The FTSE 100 down by 0.2%. The CAC 40 up 0.2%, and the Xetra DAX up 0.1%. The IBEX is down 0.2%. So we have a fairly mixed bag, really, when it comes to the geography of Europe, and hence why the Stock 600 is not moving more than 0.1% this morning. US futures do point to the upside. A little bit of ongoing recovery, perhaps in tech stocks. Nasdaq futures seen up by around 0.25%. The MSCI Asia Pacific's story overnight was a positive one, up by 0.8%. Some better mood music coming out around the Chinese narrative. We've been following the Chinese plenum and all the headlines, the longevity of Xi's tenure very much at the heart of all of that. But what does that mean for common prosperity? Do we better understand it? Are we near the end of that common prosperity drive, or at least understanding what it's trying to achieve? That all adding up to a slightly better mood music in the Asia session. In terms of other assets, we're a little weaker on oil prices, 82.41 on Brent, down 0.6%. The yield on the US 10-year, the cash market getting its full chance to react to Wednesday's CPI, or continue to react to Wednesday's CPI data. 1.56% is where we trade there. So we see a little bit more movement to the upside in yields. Not so much that it's really knocking the equity story just now, but we'll watch the speed of the climb in those yields. The dollar a touch weaker, flat to negative this morning for the dollar index. That is Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's going on around the world.
Anna, good morning and thank you. In Germany, the number of new virus cases have surged to a record. The latest data comes as several regions in the country weigh additional measures to curb the fourth wave of the disease. Germans' efforts to control the pandemic have been complicated by a lackluster vaccination campaign, with millions of adults not yet inoculated. Now, in the US, a ninth person who was injured at a music festival in Texas has died. Authorities in Houston say the student was critically hurt during rapper Travis Scott's performance at Astroworld last Friday. At least 60 lawsuits have been announced, singling out Scott and fellow singer Drake, who took to the stage in the final 15 minutes of the concert, well after authorities had declared an emergency. And we're being encouraged to think twice before buying gift cards as Christmas presents this year, just in case the retailer collapses, which has found that's happened to around 1 in 10 people since the start of the coronavirus pandemic. The group says while credit card purchasers offer some protection, gift cards themselves aren't regulated. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Apologies for losing my voice.
That's okay.
On and off between there.
That's okay, Leanne.
I'm back.
You muddled through. Well
Yes,
done.
thank
Now,
you.
let's turn our attention to the luxury sector while Leanne goes to get a drink of water. A slew of companies reported this week. Richemont, the latest, announcing first half operating profit that beat as earnings exceeded pre-pandemic levels. For more, our senior luxury analyst at Bloomberg Intelligence, Deborah Aitken, joins us now. Deborah, so we're mostly through the results season. Can you sum up where we are then in terms of growth? It seems watch sales doing pretty nicely for Richemont. Where are we on the story?
For Richemont in particular, very strong. So, in fact, if I just take one step back, all of the luxury sector has more than made up for the losses in 2020. So if I look at the luxury sector, sales were 17% lower and net profit was around 32% lower in 2020. That's been fully compensated and we're running around 8%, 7 to 8% ahead on sales versus 2019. And we're running around 15% ahead by the end of the year on earnings. If I switch to Richemont and do a comparison, Richemont's versus 2 years ago, we're seeing sales up 24%, and we're seeing over a 600 bip increase on operating profit, driven by its jewellery division, led by Cartier, where sales there are overall for jewellery up 41% versus 2019. So that puts it into context, one of the very top performers across jewellery and across luxury overall.
Okay, so I mean, maybe is this people spending, Western consumers perhaps who've managed to accrue savings during the pandemic? Is that people spending that money? And have there been any outliers to this positive story? Certainly, I remember negative reaction in markets to the Ferragamo numbers.
Mm-hmm. So. Two areas for growth. US has absolutely boomed, and there are comments that despite the measures taken by the end of September and the fact that some of the benefits were taken out of the system at the end of September, that hasn't impacted through October. Still very, very strong recovery and rebound in the US. China is surprisingly strong. We had the overhang of the query on common prosperity. In August, we had around 40 plus cities closed. China overall has rebounded in September, went into the July period really strong, and we're expecting a very solid 4Q. And you saw the Alibaba numbers with sales of 85 billion. So overall, really strong there too. If we switch to individual companies, there are a couple of outliers. We saw Ferragamo, one as you mentioned, and then also Burberry. So with Ferragamo, sales are still down 10%. And they did mention maybe some sentiment on common prosperity in China, maybe hampering their own brand, but it isn't the strongest. They're still rebuilding. They're still going around, almost finished though, with closure of wholesale stores, moving to fuller price, and that is where they are. So for Ferragamo and for Burberry, it's been a different story versus the rest.
Okay, so it seems as if the common prosperity drive maybe not quite such a clear link. Just briefly on bottlenecks and supply chain, Deborah, what's the latest there? Very briefly.
Yeah, the heritage companies have it all under control, coming through and producing from France and Italy. They've always had a very solid global footprint, and they do more and more online with third parties. So that's all solid, and they use air freight. For those who are the fashion entry type brands, so a Michael Kors and a Coach into luxury, they do 40% of production from Vietnam. They've managed via air freight transfer and also by really building ahead of time on inventory.
Okay, so sending some of it by plane. Interesting developments. Thanks very much, Deborah. Senior luxury analyst at Bloomberg Intelligence, Deborah Aitken, joining us there with the latest on the luxury sector. It has been a really busy week on that front. Coming up straight ahead on Bloomberg Daybreak Europe, joining us next, Microsoft's Chief Digital Officer, Jackie Wright, Britain's most influential black person, according to the Power List 2022. We'll get into a conversation with her next. This is Bloomberg.
This is a Bloomberg Money Minute. If a Sony PlayStation 5 is on your holiday wish list, you may be disappointed. Sony is cutting its production outlook for the gaming console due to chip shortages and supply chain problems. The company has trimmed its earlier forecast for 16 million units by about 1 million. General Mills is looking to offload its Progresso soup and hamburger helper brands. Sources tell Bloomberg the company is hoping to raise $3 billion from a sale of those brands. Just because Facebook says it's doing away with facial recognition, don't expect the technology to go away completely. It's still very much in use. Macy's is using it to combat shoplifting. Microsoft working with a bank in Australia to replace ATM cards with face scans. And Amazon sells its facial recognition service to a Korean company that uses face scans for event tickets. Singles Day shoppers in China spent big. Alibaba saw record sales of $84.5 billion. Elisa Parenti, Bloomberg Radio.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Keene, Jonathan Farrell, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
Is it time to pivot? Commonwealth Financial Network can help you recognize when you've reached an inflection point in your business, whether you're a solo practice that's slightly overextended or a multi-advisor firm looking to improve integration. For more than 40 years, we've provided advisors the support they need to position themselves for continued growth and success. Visit commonwealth.com today and propel your business forward. Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
How are financial services firms managing in this new reality? Claire Santaniello, Managing Director at BNY Mellon's Pershing, explains.
If the current times have taught us anything, it's the critical role that technology plays in client relationships. Global conditions have created a business imperative for firms to digitally transform the way they meet client needs and the way they work. Pershing's industry-leading technology enables you to adapt to the evolving ways your clients want to do business, now and in the future, and can help you build an even stronger digital client experience in a simpler, smarter, and safer environment. We have worked with clients of every size to transform their business. Pershing gives you the foundation to stand on, plus our unique perspective, to help you run your business even during the most uncertain of times. We help you consider everything.
To learn more about how Pershing can help you transform your business, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seizechange.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal...
From Bangkok, she joins us on the phone from the Hudson Valley.
Bloomberg Radio. Bloomberg. The world is listening.
Bloomberg.
Broadcasting live to London on DAB digital radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
It is 8:30 in London, 9:30 if you're in Paris or Berlin. I'm Anna Edwards. You're listening to Bloomberg Daybreak Europe. European equity markets have been trading for half an hour then and are fairly flat actually this Friday morning. It has been a busy week. Certainly inflation has been really in focus. Markets have been reacting to those inflation prints, those high inflation prints in the case of Chinese PPI and US CPI through the week. And perhaps we're taking a little bit of a pause, a little breather from that. We still have some earnings stories coming in. So the European equity markets, as I say, fairly flat. The FTSE 100, though, is not flat, down by 0.3%. The CAC 40 also to the upside, up by a little higher, 1.5% higher for that sector. And luxury goods are in focus, as we discussed earlier in the programme with Deborah Aitken, and we see some positive reaction to the numbers out of Richemont and beyond. To the downside, though, basic resources move lower, down by 1%. And so there you go. That explains why we see London underperform and France outperform. It is all about luxury, less about mining materials this morning. The session in Asia was lifted by some better mood music around the Chinese common prosperity story. Do we have a handle on how extreme the clampdown will get there? MSCI Asia Pacific down by up by 0.8%. The Nikkei and other markets in the region, the Topics and the Kospi all making moves to the upside of more than 1%. The US 10-year yield is at 1.55% right now. So that is a little bit higher than it was earlier on in the week as we increasingly price in further tightening of policy from Senator Adam Aaron.